EI Advisory Board member to kick us off today. So Justin, would you like to take the microphone and get us started?
Yes, ma'am. Thank you, Kyle. I appreciate it. Well, welcome everybody to our live stream joint AE Institute virtual education session. We're titling this one Government Relief for Associations and Members, What You Need to Know. I'm Justin Landon, the AE Institute Advisory Board member, and I'm the CEO of the Lexington Bluegrass Association of Realtors in Lexington, Kentucky. We're happy to have you here today. This topic is incredibly important to our members, and if you're experiencing anything like I am, you're getting bombarded with questions, some people in a bit of a panic, others just in an utter state of confusion. And hopefully, as we get through this today, we'll be in a better position to give them some guidance about how they're going to address their very uncertain business future right now. I think this is a tremendous opportunity for us as a Realtor Association to show our value. I know that I have felt a tremendous efficacy in my role in the last couple of weeks, and maybe more so than ever before. And I think our members are turning to us now for things that they didn't need before all the time. But right now, we are truly the source of the source, and in many cases, the only conduit that our members have to this kind of information. So while many of us joined the Facebook Live session yesterday with our leadership, thank you to NAR for hosting that. It was a great session. Today, we're going to be focused a bit more on the granular stuff, government relief information that we have to understand to provide best guidance to our members. We are hoping to make this session a bit more interactive today so that we can provide you with the information you're most in need of receiving. I myself have a lot of questions, and I'll be interjecting those questions when I think it's appropriate. But if you have questions of your own, please put them in the chat function located in the bottom right of your screen. You can also access the chat by clicking on the question icon when you hover over the cursor at the bottom of the screen. We'll use that chat function to field all your questions. We're going to take about 45 minutes for the presentation, and we're going to be very respectful of your time and try to get that on schedule. But if some of our questions spill over, our panelists will be here at least until the top of the hour to answer as many questions as they can get through. Before I introduce our presenters, there are some WebEx specifics I'd like to share. For better streaming, please close unnecessary browser and windows on your computers. This is very hard for me. I have about 70 tabs open at any given moment. That should speed up your streaming and reduce the buffering that we see sometimes. We have everybody muted, so just to avoid background noise, so make sure you're using the chat function to interact. And with that, it's my pleasure to introduce our speakers and get the program started. Joining us today are policy experts on NAR's advocacy team in D.C. They have been working tirelessly for the last several weeks, distilling all the information from the Federal CARES Act that deals with the Small Business Administration loans, some unemployment insurance questions, and some of the other programs that will help keep our members afloat during this pandemic. Today, we'll hear from Megan Booth, who's the Director of Federal Housing Valuation, Commercial Real Estate at NAR. Erin Stackley, she's the Senior Representative for Commercial Legislative Policy. And Nia Duggins, the Policy Representative for Business Issues. With that, I'm going to turn the program over to Megan to get us started, and let's go.
Thank you, Justin. I'm going to talk a little bit. Hopefully, you've heard a lot about the basics of what I'm going to talk about today. And let me say that we are going to do our best to give you the most up-to-date, accurate information. But as you will find when you ask some of your questions, not everything is knowable at this point, as this mega bill just got signed into law 2 weeks ago. And agencies and states and everybody who's implementing it is doing their best to get up to speed, as are we. And so we're going to provide you with the best information that we can. So I encourage you strongly to go to these links. These are updated daily, sometimes hourly, depending on what is happening. So please go here. You can also use that little text icon, text COVID-19 to 30644 for your members. If you send that out to them, that will take them to NAR's coronavirus page that has links to all of these materials. So like I said, these are literally updated at a minimum once a day. So we are constantly updating these as we get more information. So I encourage you to check those links out. I'm sure you've all heard about the essential services argument, and that is real estate an essential service? So let's start by saying, yes, it is. The federal government has declared residential and commercial real estate and settlement services as essential. But that's lovely, but your state has to actually reinforce that. So it's all up to what your governors say on whether or not you are essential or not. It is important to know that being essential does not make you ineligible for other services, which you'll hear about later. So don't panic that if you're eligible, if you're essential, that means you can't get unemployment or any of the business loans. You are still eligible for those, depending on what level of work you are doing. Okay, there's a couple different things that are happening for individuals. The biggest one, I'm sure you've all heard, is that you are all going to get a check. If you make less than $75,000 a year for a single person or 150 filing jointly, you will receive a check from the federal government. The biggest thing I can tell you here is there is a huge market for scammers right now with this program. They are emailing people, they are calling people. The IRS will not contact you with respect to this check. They know how to get in touch with you. So based on your previous tax returns, they will either use the bank account you supplied with your tax return to automatically deposit a check for you. If you did not do automatic deposit or automatically pay your taxes through your bank account, then they will mail the check to you. I will say there are going to be delays with the mailing, we have heard. Very soon, the IRS will have a website available where people can securely, on the IRS's website, provide their bank routing information. But do not look for that link. Go to the IRS website to get it. Don't have someone send it to you because it could be a scam. So we will put a link to it on our FAQ document that I provided you with the information about earlier. But you will, but you can update that with your bank routing information. It's not available yet. I checked about half an hour ago. The other good news that we got last night is the due date to file and pay taxes, as you know, was extended to July 15th. There was some question, especially for our members who may pay quarterly taxes because they are not regular employees, don't just have it withheld by their employer. So if you owe first quarter or second quarter taxes for 2020, the due date for both first quarter and second quarter is also July 15th. So you don't have to make that first quarter payment now. You can make it on July 15th along with your second quarter payment. That's important to know. There's no penalties to do that. There's a few other things. You can take early withdrawals from retirement accounts, things like that. There's a bunch of information on our FAQ, but there's also a link here to the IRS's website. We've heard a lot of things about what can homeowners do and renters do. So the biggest thing is if a homeowner has a government-backed mortgage, and that's the broad definition of a government-backed mortgage. So that's FHA, VA, rural housing, but also a loan securitized by Fannie Mae and Freddie Mac, then they are eligible for forbearance up to 360 days. So a year worth of forbearance without proof of hardship. They are eligible for it, but they do have to call their lender servicer. You cannot just decide to stop paying your mortgage. So call your lender servicer, and we are strongly encouraging realtors to get in touch with their clients. This is where they can be a great source of information for their clients. And being smart when you're talking to your lender servicer about how you are going to repay that. This is not removing your obligation to those mortgage payments. You still owe those mortgage payments. So you want to either work out some kind of repayment plan if you can make partial payments now, or you want to ask for it to be added on to the end of your loan. If you do not ask for this, at the end of on the 361st day, you will owe 12 months of mortgage payments, or you can be foreclosed on. So people need to think about how they're handling that. Renters in a property that has, I'm also going to tell you that on our FAQ, there is a link to how a borrower can look up if they have a Fannie Mae or Freddie Mac mortgage. You can look it up if you do not know. Renters in properties that have an FHA mortgage or a Freddie or Fannie mortgage can request relief from eviction for 120 days. There's also a number of states and localities. I would hesitate to say most states and localities have also put a prohibition on evictions. So they can get relief for eviction for up to 120 days. Again, they have to call their landlord. They don't just automatically get it. Call your landlord and figure out how you're going to make those payments on the 121st day. Again, it's important that you talk to the person you owe the money to because you still owe them the money. On the housing provider side, many landlords are also eligible for some kind of forbearance. So if you are a multifamily property owner who has a Fannie Mae, Freddie Mac, FHA, or anything touched at all by a federal loan product, you can get 30 days for hardship. You do have to prove a hardship, and that can be extended twice. You can get a total of 90 days. Now, we know there's a disconnect here. So the person who owns the property can get 90 days, and the renters get 120 days. How does that work? How do you pay your mortgage? That's a real disconnect, and we are working with a coalition of multifamily housing providers to try and fix that and make it more equal so that both the renter and the homeowner get the same type of relief during these times. Because if you're not getting your rental payments, you can't make your mortgage payment either. About 50% of the multifamily universe has a federally protected, has a federally connected mortgage. The other 50% should call their servicer or lender to see if they can work something. How do our members still sell homes? So this is very important with all the rules being different in every single state about what you can do and what you cannot do. NAR has put together a guide. There's a link here to help you try and figure out what you can do and what you should be doing in these times. Obviously, we encourage significant social distancing, take all necessary health and safety precautions. Mabel Guzman, who is NAR's 2020 VP of Association Affairs, has a fantastic video about how to do virtual showings that you can share with your members. She's been doing them for years. This isn't a new thing for her. So she has some great tips for members on how to do a virtual showing and how you can make that successful for your buyers and your sellers. We're also hearing a lot of people saying that the lender told me that FHA increased their credit score and now my borrower cannot qualify anymore. So number one, FHA, Freddie Mac, and Fannie Mae have not changed any of their lending guidelines for borrowers except to make them more flexible. So if the lender is saying that, however, they are totally within their right to do it. These loans are still made by private lenders and they can set their own rules. And many of them are. So from their perspective, think about it in that you are, you're a lender and you have someone about to close on a loan, and you know that tomorrow they can call you back and say, by the way, I'm not going to pay this for the next year. So there's a lot of hesitancy in the lending community to do that. We are trying to address that. We have asked FHFA and the Federal Reserve to put together some sort of lending process for lending facility or lenders and servicers to be able to pay their investors on the back end of these loans. That's the only way they're going to feel some security in providing these loans to borrowers who could immediately ask for foreclosure. So, ask for forbearance, excuse me. So that's a tough issue. We are working on it, but just know the federal government hasn't changed any of their requirements, but many, many lenders have. And in fact, we think this is going to be it's going to get a little bit worse before it gets better with respect to the tightening of credit for home buying. Verification of employment is another one we hear. Every loan does require a re-verification of employment just before closing. If the home buyer is still employed, they should be able to get that. So for example, none of us on this call, or most of us on this call, are not working from our regular business office, right? You're working from your house. Yet if I was closing on a loan, I could get someone from NAR to confirm that indeed I still work there. All federal loans are allowing oral and email verification of employment. So that should be doable for most people. If in fact your home buyer has been furloughed or laid off or unemployed because of the COVID-19 crisis, they will be denied a loan. That's because generally if you don't have an income, people aren't going to give you a loan. Super unfortunate, but that is the way it is. So that verification of employment is still a requirement. If you are still employed and just for some reason, there's some reason you cannot get that verification of employment, the lender can offer you the loan if you can show an increased level of reserves than is normally required, but that's going to be tough. Real quickly on appraisals, all federal loan programs are now allowing for external appraisers, desktop appraisals, even appraisals using MLS data. And lastly, e-closings. A lot of states allow for remote notary. I just realized I'm showing you this slide that says click here, and you cannot click on a PowerPoint slide. So I'll make sure that Kyle sends you out the link to where you can find our list of who allows for remote notary. We are also working on federal legislation to try and sort of preempt all those states that do not have e-notary and e-closing, and hope to have that out through that process. Okay, The biggest questions we get from our members have to do with relief for independent contractors and small businesses. And hopefully you've all heard that we were successful in getting independent contractors and small businesses included in all of the relief programs. And I'm now going to turn it over to my colleague, Nia, who is going to talk about pandemic unemployment assistance programs and benefits.
Hi, everyone, and it's great to be able to join you virtually. I am going to talk briefly about the CARES Act and the expanded unemployment compensation benefits that are now available to independent contractors as well as to self-employed individuals. So the CARES Act, under the Pandemic Unemployment Assistance Program, expanded unemployment benefits to independent contractors and self-employed individuals whose work has been impacted as a direct result of the COVID-19 public health crisis. So that means that you're either completely unable to work or you're partially unable to work as a result of the crisis. This definition takes into account, or the scope of the benefits, I should say, takes into account closures within particular states, social distancing guidelines that we have been given, as well as many state orders. One of the main questions that we've received is if an individual is still eligible to receive unemployment benefits, even though real estate has been deemed an essential service in that state. Yes, you still should apply for unemployment benefits, even if it's been deemed essential, because just because you can work in a particular state doesn't mean that you're able to, given certain restrictions, and safety is of utmost importance. So we want to make sure that folks are safe across the board. And so as a result, if your work's been impacted, you still are eligible. Partial and full benefits are provided under this particular program. And in order for states to participate in the program, they must enter into agreements with the U.S. Department of Labor to offer these expanded benefits. It provides up to 39 weeks of assistance for eligible individuals, as well as once you've been deemed eligible by your state, there's an additional $600 per week that you can receive essentially between the time your state signs the agreement with DOL through July 31st. The coverage period for these benefits is beginning on January 27th of 2020 through December 31st, 2020, and you can receive benefits for weeks of unemployment that, where you have not been able to work as a result of the public health crisis. So it takes into account, in terms of your eligibility, many different considerations. For self-employed individuals, primarily, the state is going to want to see really income verification for wages, or it's not really wages, but money that you've earned, income, net income primarily, that you've earned from self-employment. So that is one of the major things that they will be looking to. This program is fully funded by the federal government, but it's fully administered by states. So in order to find out your specific eligibility and how to apply for unemployment, you have to go through your state labor agency that's responsible for administering unemployment benefits. I know a lot of the agencies are inundated and are working really around the clock to implement these programs, and so it will take definitely some patience to get through this process, because the states are working to expand the benefits, but the infrastructure has to be in place in order to do that. So, for example, some states are asking if your last name begins with a certain letter that you apply for our benefits on certain days in order to accommodate all the requests. So whatever those guidelines are for your state, definitely check there. And also, please visit our website, nar.realtor/coronavirus UE for unemployment benefits. Information and FAQs. We're updating those FAQs regularly, and we also have heard this morning from DOL that many states have already entered into these agreements, which is a good thing. So definitely continue to follow up. If you've applied for unemployment in the past and told that you were ineligible as an independent contractor or self-employed individual, please go back and definitely try again and Continue to check our website as well as with your state for more information on this program. Thank you.
Okay, great. I'm going to turn it over to my colleague, Erin Stackley, right now, who's going to talk to you about all of the 2 different SBA programs.
Thank you. Hi, everybody. I know that if you guys are dealing with anything like what we've been dealing with, you've been getting inundated with questions about the SBA programs that the CARES Act created or sort of enhanced. And I'm going to start my presentation with a caveat, which is that there is still a lot of detail about these programs that is unknown at this point. Typically, a hundreds of billions of dollar program would have gone through about a year of hearings and debates on the Hill, followed by at least a year of rulemaking, giving the lenders time to figure out how they're going to implement it. And as Megan mentioned, the CARES Act passed 2 weeks ago, and the SBA loan programs kicked in 1 week later. So it's unprecedented speed. However, that does mean that there are a lot of areas that are still confusing, frankly, and we're filling in the blanks as we go. So let me first start and talk about the SBA Economic Injury Disaster Loans. This is, I'll say, the smoother of the 2 programs because EIDL already existed. It was already a program within the SBA, and when this pandemic was declared a disaster, people could begin applying for these loans through the SBA directly based on COVID-19 economic injury. These loans are available for up to $2 million per business. And again, you apply directly through the SBA. They have a new streamlined application on their website. You can see the link for it there. This is also included in our SBA FAQ on our coronavirus page, which I believe Megan shared the link for in the chat function. What the CARES Act did on this is it created a new $10,000 advance grant that is available to businesses. If someone applied for an EIDL before the CARES Act was signed into law and they're interested in receiving that advance grant, they should go back to the website and reapply through the new application process. So what's the big deal with this advance grant? Well, it is forgivable. That's the big deal with it. And in order to get that loan forgiven or grant forgiven, you have to follow some pretty basic guidelines. You can go towards eligible uses, which include payroll costs, mortgage and rent payments, utility costs, and other debt obligations that can't be met due to the crisis, as long as they were entered into before February 15th of this year. If that is followed, that $10,000 portion will be forgiven. And you may have caught that the word advance is included there. The CARES Act specified that this would be dispersed by the SBA within 3 business days of receiving the application to businesses when they apply. That's not happening. The SBA is at its absolute limit right now, and they are trying to get things out as quickly as possible, but the demand for these is so high that it's looking more like 1 to 2 weeks. Basically, however long it takes for them to approve your application, you should see the loan dispersed within a few days from there. So if you have members who have applied and they're getting impatient because they haven't gotten the money yet, the best advice is
send you that list?
be patient.
Excel spreadsheet?
Yeah, no, I'm
A little bit of feedback on the line there, I think.
Oh.
a lot of them are in there. They have a check mark
On
next to
to
them.
the next slide, please. I don't know. Can I don't think I can control that.
What are you doing?
I'm hearing a little bit of background conversation. If everyone could mute their lines, unless we're picking up some rogue airwaves. Okay, this is probably the program that you're hearing the most about from your members, the 7A Payroll Protection Plan. This is a brand new $349 billion program created in the CARES Act. The purpose of it is to help small businesses impacted by COVID-19 and help them stay open, but also keep their employees on payroll. And forgive me, I should have said this at the top of this. When we talk about small businesses for these EIDL loans, as well as the payroll protection plan, what we're talking about is businesses with 500 or fewer employees, sole proprietors, self-employed individuals, and independent contractors. NAR was the driving force behind getting the language included in the CARES Act that specifically allowed independent contractors, sole proprietors to be included in these programs and their forgiveness. So keep that in mind as I'm talking about these. They all apply to independent contractors. So how much money can people get for PPP loans? You can get 2.5 times the average monthly payroll or your average monthly income if you're an independent contractor or self-employed. And that amount needs to be used over the course of 8 weeks. So you figure out your average monthly income, and I'll come to sort of the documentation requirements, or rather lack thereof, specific requirements in a moment. Once you get that money, you have the 8 weeks to use it. And if you use it for an eligible purpose and keep it within the program requirement, the loan is 100% forgiven. It essentially becomes a grant. So the requirements for that are 75% of the total loan amount needs to go towards maintaining payroll costs. Then you have to keep the same number of employees, if you have employees, as you had at pre-COVID levels. And the rest of the program has to go, or the rest of the loan has to go towards an eligible use. Eligible uses are payroll costs, mortgage interest, rent, and utilities. If you meet those requirements, the loan is 100% forgiven. Now, if someone can't meet those requirements, they can't put 75% of it toward payroll costs, they have to put more of it toward their rent or their mortgage interest. Say they've had to let employees go because they just can't keep them on payroll during this time. You'll still see a portion of that loan forgiven, but it does phase out as those numbers drop. We have guidance from the SBA, we have guidance from the Treasury on these, and they've sort of filled in some of the gray areas, but there are still a lot of questions about the program. We're getting a lot of questions. How do I show my income? I'm an independent contractor, but I get paid, and it goes through an S-Corp, or I'm collecting commission, and I don't have this certain type of documentation. What we know is that for small businesses, you need to provide payroll tax filings. For independent contractors, the Form 1099 MISC is applicable. Really, beyond that, it's any and all documentation that can show either your payroll, what you're spending on your payroll, or what you're getting in your income each month. Right now, again, we're waiting for more specific guidance from the SBA, but in the absence of that, you should talk to your SBA lender, which leads me to another point about these programs, which is that these are implemented directly through FBA lenders, not the SBA. So if you're going to apply for these, and applications as of today are open to all business types, including independent contractors, you should go to your SBA lender if you have a relationship with them already. And if not, our FAQ has a link to the Find an SBA Lender tool on SBA's webpage. The question we're getting is whether or not you can apply for both of these SBA loan programs, and the answer is yes, you can. EIDL is based on working capital needs, and obviously the 7A PPP loan is intended to keep people on payroll. So you're able to apply for both of them. However, there's some caveats, of course. You need to make sure that the loan proceeds go to different purposes. So keep a careful accounting of where those loan amounts are going to make sure that the funds don't intermingle. Additionally, if you do get the PPP loan and it's all or a portion of it is forgiven, and you get the EIDL with that $10,000 advance grant, then the $10,000 advance amount is subtracted from the PPP forgivable amount. Basically, you can't have both of them forgiven, but you can get both of the loans themselves. Feel like I just talked for a really long time. I'm not even sure. Do I have another slide on here?
Nope, you're good. Thank you.
Okay.
And please follow along in the chat. I've been trying to answer questions as Erin has been talking, and I know Justin is making a note, so we will catch up with everybody. This is our link to our SBA document, which has been revised just yesterday, so I encourage you to look at it. It has, we've set it up a little, we just basically changed a little bit of the order of the questions to make it easier for members to say, like, what are the different loans? What can I apply for? What's happening with that? And I can tell you that we're hoping that we will have an infographic showing members the difference between the two SBA programs, possibly later today. So stay tuned to that page. It will definitely link to that page. So I can also tell you that, as Erin mentioned, and Nia too, a lot of these programs are brand new for our members. They've not been eligible for them before. So I know you all are getting gazillions of questions, as we are, from members about exactly how to apply and what they should do. I will tell you, we are not offering one-on-one advice to help people go through their applications, but we are going to try, and we've recently signed a contract with an independent law firm to help us put together some scenarios to sort of show our members what different scenarios would look like and which type of loan would be appropriate. And so we hope to have some of that available by early next week. All right, the last thing I wanted to sort of touch base with you guys on is commercial real estate. We have commercial members too, not just salespeople. So some super exciting news in the field of commercial today. So for both 1031s and for qualified opportunity zones, there were a lot of concerns around the deadlines. As you know, in a like-kind exchange, there's two different deadlines, a 45-day deadline and a 180-day deadline to finalize that exchange. And there was concern that how would that work in this time if people can't identify a property or can't close on the exchange. We're happy to say that after some intense lobbying by NAR and others, IRS last night around 5 o'clock put out new guidance, and they have extended the deadlines for both 1031 like-kind exchanges and for investments in a qualified opportunity zone. If any of those dates hit between April 1st and July 14th, you now have until July 15th. So we're very happy to say that we saw that extension because this is going to be a struggle for some people. If you have members who are property managers, IREM, an NAR affiliate, the Institute of Real Estate Management, has a fantastic website that they basically opened up to all realtors. You don't have to be an IREM member to access it. They have a great pandemic guide for some steps that a property management office should take. They have a whole bunch of really short videos on how to talk to your tenants, whether they be residential or office or retail or whatever. There's a lot of great resources on there, so I encourage you to direct your property managers to that site. There were also a couple great provisions in the CARES Act with respect to the tax treatment of commercial real estate. The first one is the qualified improvements. So with the passage of the CARES Act, businesses are able to write off immediately the costs associated with making internal improvements to certain types of real estate, including restaurants and retail stores, instead of having to depreciate them over a 39-year life of the building. This means you could, assuming you already filed your 2018 tax return, which hopefully everybody did, since that was last year, they can refile that. They can amend their return and access cash immediately by amending that return and taking advantage of that provision. There's also a provision that will allow businesses to offset tax losses from previous years. So you can carry back net operating losses for 2018, 2019, and 2020 against profitable years for up to 5 years. And you can get immediate refund if you amend a previous tax return. So that should also be super helpful. Property owners are also likely eligible for most of or several of the SBA programs that Erin talked about. So small commercial businesses, commercial real estate businesses should also look at that. Okay, so what is next? We are waiting for further guidance from the Small Business Administration and from the Department of Labor. We are also already working on phase 4. So the previous 3 bills were phases 1, 2, and 3 in Congress. Phase 4 will be the next one. I can tell you there was a bill hotlined in the Senate yesterday to increase the funding for the SBA programs. So that's something that I saw in the questions, like, hey, I've already heard they ran out of money, and Erin addressed this. Nobody has run out of money yet, but there is a concern that people could, that the lending institutions could run out of money as early as mid-May. So, and as Erin said, today's the first day that independent contractors can even apply. So we're hoping that this increased funding will go through the Senate, and we'll be keeping on top of that. We're also trying to get remote notary done for the entire country, not just for those areas that already have it with federal legislation. We think there may be a bunch of people that need some housing counseling to help deal with how they're going to make up all their missed payments. So we want to increase funding for housing counseling agencies. Talked about the disconnect between the landlords and the tenants, where the tenants get a much longer forbearance period than the landlords do. We're trying to match that up. So there's a number of things we're working on. We're going to keep pushing this. There's going to be more and more relief needed as time goes on. So stay tuned. We're going to keep trying to stay on top of all these issues, and go to our website for more info. I'll turn it back to Justin.
Thank you, Megan. So I have a number of questions here. The most common question that I've seen in the chat has to do with the eligibility of PPP loans or EIDL loans for 501c6s and or real estate associations. And I just want to note that although some of us are 501c6s, some of us may be otherwise, and most of our MLSs may be true corporations. Can you just walk us through what that eligibility would look like, Erin, for kind of some of those various scenarios of different organizational structures that our associations may have?
So 501c6s are not eligible right now for the PPP loan program. The only 501c3s are, but not 501c6. So at this time, you cannot apply for that loan program. NAR is working with ASAE, and we sent a letter specifically asking for relief for 501c6 organizations, highlighting the loss of both the loss of income and also the expenditures for things like canceled events that people have lost money on. So we are hoping to see relief in phase 4, and whether that's through opening up PPP loans to them or some other form of relief, we're working on that. A 501c6 can apply for the EIDL loan. So you are eligible for those if that's how you're structured. Otherwise, in terms of organizational structure, if you meet the other requirements, which 500 or fewer employees, 500 or fewer employees, and you have payroll costs, then you would qualify to be able to apply for these programs.
Okay. And okay, so quick overlapping question between unemployment insurance and the public protection payroll protection program. If you have employees that are collecting unemployment insurance, you would not be able to use the PPP for those employees. You'd have to take them back off unemployment. Would they have to pay back their unemployment benefits after starting to receive the PPP? I guess there's some logistical questions in there in terms of how the PPP and the unemployment insurance overlap.
I can talk a little bit about this, and maybe Mia can fill in some after I start. But basically, this is an area of confusion at this point. PPP, in order to get the forgiveness, you have to put at least 75% of the total loan amount toward payroll costs for the 8-week period that you're covering. So you need to be paying the employees that you have. And of course, you would need to have your employee headcount at 100% as well. It's not clear right now if that would make an employee ineligible to also collect the pandemic unemployment assistance. My sense, and this is not an answer that we've had from the government or anyone yet, but my sense would be if people are getting paid at a high enough level, then they may be ineligible for that unemployment. However, the PPP program only covers an 8-week period. So if after that 8-week period, you have to let one of your employees go or reduce their pay to a point that they would qualify, then common sense would dictate that they would be able to collect PUA at that point. We have not gotten confirmation of this from the government yet, but that's sort of the plain language, common sense view of it, I think. And Mia, I'll turn it back over to you if you have anything else to add to that.
Yeah, so there's a lot of confusion in terms of coordination of the programs and whether someone is able to receive under both programs. I will say that under the CARES Act, there are some other benefits in terms of employers if they're able to retain employees even on a part-time basis. So they have what are called short-time compensation programs and other benefits that you can speak more to the specific state labor department about in grants to try to incentivize employers to keep staff as long as they can, even if it's on a part-time basis. So with those short-time compensation programs, essentially, the employer is still able to retain the staff possibly on a part-time basis, and then the staff person is still able to also collect unemployment on a partial basis. So there are some joint programs of that sort, and there are a lot of different hybrid solutions that really the federal government is trying to give to states in this respect, but there's still not a lot of clarity around implementation fully of a lot of this. And that is where, we're really in the weeds and having to sort of just wait on DOL to give additional guidance in that regard to understand what states have discretion on and how the programs coordinate and should coordinate in full implementation. So a lot of unanswered questions, but hopefully that gives a little clarity.
I'm seeing a lot of questions, and I'm receiving a lot of questions in my own role as well, but I'm seeing a lot of questions in the chat right now that begin with, what should I do? or what should I apply for? And I think to everybody that's listening, I would say that it's really difficult for anybody on this panel to say with a specific set of circumstances what you should do, whether you should apply for a PPP loan or an EIDL loan, or whether you should just go on unemployment. And so anybody on the panel, though, have a recommendation about, who should both our AEs, asking questions about their association and who they're recommending their agents or their members turn to? I mean, should we be sending people to their CPA? Who is the best source in a local environment to answer some of these questions?
So when it comes to applying for the SBA program, you should, if you're deciding between the two or deciding whether or not to apply for both, you should absolutely talk with your accountant because it is really going to depend. You may qualify for more money under EIDL than you do under PPP. PPP, it has the potential to be 100% forgiven. But EIDL, again, you may qualify for more money. So it sort of depends, how much money do you need? How much money are you comfortable knowing that you'll have to repay? Will you be able to qualify for the forgiveness of PPP? Will you be able to maintain that 75% payroll level and full employee headcount? Or will you only qualify for partial forgiveness under that? These are questions that you'll have to work out with your accountant and sort of figure out what you are comfortable with as an organization or your members as an independent contractor or small business. In terms of resources, again, your accountant, but also if you have a relationship with an SBA lender, they would be a resource in terms of the application process itself right now. The administration has given lenders basically full implementation within the guidelines of what they set out authority. And so some lenders have very specific requirements. Others are sort of playing it more loose. Some of them have their own application forms. So you should speak to an SBA lender when it comes to actual questions about the applications for each and what is required. And finally, and I cannot speak to how quickly you'll get a response or an appointment right now because I imagine they are very slammed, but the small business development centers that are scattered around the country, those can be a resource as well. for people that are having trouble finding an SBA lender, for people that just have general questions about the program or questions about how they're going to see their small business through this. That is the purpose of these small business development centers. We have links in our FAQ, and it's easy to find on the SBA site how to find an SBA or a small business development center. And again, I just, with everything the way that it is right now, I don't know if you'll get as speedy of a response as people probably want or normally would get, but that is another resource that people can turn to.
And I will say, we've reached out to our local economic development agencies and our local chambers of commerce. They've also been incredibly helpful in at least connecting us to the people who can answer the questions. One of the things that I know that I have great concern about, and I've seen it expressed at least a few times in the chat, is that our industry, both real estate and association, both, are operating on an odd delay, right? Unlike, say, restaurant workers who are hurting right now, our members are likely not hurting as much right now as they will be in 60 days, 90 days. And from our association's perspective, all of us are asking questions about assistance for our organizations. We've mostly collected our money for the year. Some have quarterly billings and annual or biannual billings, but most of us aren't going to feel the pain until the next due cycle. Do we have any understanding yet of if we're applying for assistance now, or our members are applying for assistance now, to what degree does that assistance have to be used immediately? Are we allowed to have enough money to make payroll now, but then use the government's money to make payroll now and saving what we have now for later? I mean, what does that look like in terms of a legality, I guess? I think there's some concern that, like, if I'm not hurting right now, I shouldn't apply. Is that the case?
Well, under both EIDL and PPP, they only require a good faith statement and certification that you have been negatively impacted by COVID-19. The assumption is basically if you were in business February 15th, you have been negatively impacted. Frankly, with the funding the way that it is for these programs, and there's nothing in the CARES Act or the guidance that has come out that says that you have to be in the red, basically. It makes sense to apply now. We've had the PPP loans, as I mentioned, have to be dispersed over an 8-week period. The SBA has clarified that you have 10 days from receiving the loan amount to begin tolling that 8-week period. And we've heard concern from some members, well, what if I want to save it for later? Use it now, save the rest of your money for later. It's a bit of robbing Peter to pay Paul, but, people that are collecting commissions now on deals that were begun in, say, December, but they're not seeing any new deals come in now, they've been negatively impacted by COVID-19. So use your best judgment. There is nothing that we have seen yet that says that you cannot do that. Again, we're seeing new guidance and new information come out about these programs from the administration almost daily at this point. So that may change, but right now there's nothing that says you can't do that. And again, it's just a good faith certification that you've been negatively impacted by the crisis.
We could ask questions about these loan programs and about how it intersects with unemployment assistance pretty much all day long and not really get any closer to solving the individual cases that our members are facing. I mean, I saw a question in the chat about an agent's paid $100,000 and then they run it through an S corp and pay themselves on a W-2 $30,000. What are they eligible for on a PPP? I mean, I don't know that we know the answer to that question at this point. But I know that there's a lot of work that's going to be done in the days ahead. I would say is that something I'm seeing from the chat that I would maybe request of NAR while I have the opportunity would be some kind of flowchart document that we could share with our membership that's specifically like, I'm an independent agent, I don't have any staff, here's what it looks like if I apply for EIDL, here's what it looks like if I apply for PPP, and here's what it looks like if I apply for unemployment insurance, and how much money I might be able to expect, on a multiplier basis of what I would get. That would help me a lot. I'm sure it would help a lot of folks
So I'm happy to say that the Wisconsin Association has done an excellent flow chart that we have sent to our outside counsel to verify that it's all accurate. And if it is, we hope to have it available on our website by Monday. So it's under review right now, but if you go to the Wisconsin Association, you might be able to find it there. We're not sharing it until we just can verify that it's all accurate, because we honestly don't know, but it has it set up by if you're a 1099, if you're this, if you're that. Like, so it's a really good document. Feel free to contact them.
Awesome.
And I'll just add, we've been getting, as our members have applied for these programs, and they're looking at the application forms, and frankly, some of them have gotten stuck on the very first line, because these are programs that typically wouldn't have been open to an independent contractor, for example. So they're taking a form that is meant for a more traditional small business, and they're saying, okay, independent contractors use this. Well, a lot of the questions on there wouldn't apply to them, whereas there might be some information they would want to include that a small business wouldn't have to. So we're seeing those forms evolve. The initial Paycheck Protection Program application, for example, was redone within a couple of days because they didn't have a line to check for independent contractors. So we're seeing those evolve as those issues come to light, and we are collecting feedback from our members as they go through this process, just to try to make sure that we're understanding where they're hitting confusion and where we may be able to get clarification. As Megan mentioned, we're also working with a consulting firm to bring together new resources that are more specifically focused on the mechanics of these programs, applying for them, the questions that we've been getting from our members, so sort of above and beyond the advocacy realm, but more that that ground level look at these programs as our members work their way through it. So we should have more resources coming soon on that. It is really difficult because there are 1,000,001 different potential combinations of business size, number of employees, the way that people are getting paid, the way that they're structured. So it's difficult to have answers for each of those, but we hope to be able to provide a loose enough guide that you are able to identify a path that would apply to you and then follow those steps.
I've also seen a number of questions in the chat that are, for lack of a better word, a little conspiracy theory oriented. Is there an interest, or have you all discussed doing some sort of, Snopes.com truth rumor FAQ that can go up at some point?
So in our FAQ, there are a number of, I've heard this, where we say, nope, not true. So we do have some of those in there, but that's an interesting idea to do a separate one of all the false claims. There's definitely a lot out there. Like my lender says all the money's been spent, please go away. That's just not true. So.
And the National Guard is going to come keep me in my house any day now.
Exactly. Yep, that's actually in our fact. That is one in our fact. Like, no, you are not being. This is not martial law.
So let me, real quick, because I know we're short on time, I do want to whack-a-mole a couple of these questions, though, that I think are important, that are some of these rumory ones. The real estate licensee does not need to go inactive or turn their license in to be eligible for unemployment, right?
No, that's not accurate at all. You do not have to go inactive in order to be able to receive unemployment compensation benefits or even be considered.
Are the PPP funds or any of the EIDL funds taxable?
The PPP funds are not, you will not be taxed on them if they're forgiven. So that's not like unearned income or anything like that. I have to check on EIDL. I'm not sure. I don't think they are taxable, but I will check on that.
Okay. And then I want to touch on forbearance a little bit before we get away from this, because I know I'm hearing a lot from my members about forbearance because they're scared to death it's going to crater their inventory and or lenders are just going to stop lending because they're nervous about it. So forbearance, is there any work being done or any conversations being had that the government would say to lenders of government-backed loans, you can't stop making them?
No, because, this is a free country. The lenders are not owned by the federal government, so they can't tell them what to do. However, they can do things to incentivize them to do the right thing, right? So it's a belief that so Ginnie Mae 2 weeks ago announced that it's going to have a lending facility for FHA, VA, and rural housing loans. So if they're going to have this back-end lending facility whereby if you're a lender and you offer an FHA loan and it goes into forbearance the next day, then you can still make your mortgage, you can still make your payments to your investors on that mortgage through this lending facility that Ginnie Mae is setting up. So that should be available in the next 10 days. So for FHA, VA, and rural housing lending, that's going to be super helpful. We are strongly urging Mark Calabria, the director of the HFA that governs Freddie Mac and Fannie Mae, to do the same. In a speech last weekend, he said they would not do that, but I know he's been getting a lot more pressure this week about it. And given the numbers that are coming out with the number of how tight credit is getting right now, we're hoping we're strongly encouraging him to reconsider that decision. So that would be helpful for those lenders. But I do, like I said earlier in my remarks, I think it's going to get a little bit worse before it gets better. But hopefully, worst case scenario, hopefully FHA, VA, and rural housing will pick up a bunch of the slack. The government agencies have a little bit more sway over them, but they're still private lenders. So it's a challenging thing to do. Just like we wouldn't want the government coming in and saying, you know what, realtors, you're not allowed to do business anymore for the next 4 months because you have to all stay in your homes, right? We don't want them doing that to us. They can't do it they can't tell the lenders what to do either. It's still private money. So it's a challenging issue. And so we're still trying to work through it. I did just see a question come up, and I'm just going to link it on here because it's related, about the forbearance. There's a lot of questions about what does forbearance actually mean. So all forbearance means is that they are going to relieve you temporarily of your responsibility to make those payments. But it doesn't say, the word forbearance doesn't mean when you have to pay them. It just means you're not making them right now. They are letting you not make the obligation that you are required to make every month for right now, for that specified period of time. That's why it's really important that all of us as individual homeowners, but also our members' clients, know that you need to have a conversation with your lender and servicer and talk about how you're going to repay that. Because if you don't, then they can just say, you know what, the day it's over, you owe it all to me, and you're going to owe $20,000 at one time. Yes, Vince Malta, I guess, is on right now, and he just said forbearance does not mean forgiven. That's exactly right. They are not forgiving your obligation to own that. So you still owe that money. So you need to have a conversation with your servicer and lender about how you're going to repay it. Ideally, Freddie and Fannie has encouraged all of their lenders to have it added on to the end, and that's probably the best scenario for everyone if you can get that. But you need to have a conversation. This isn't the time to say, you know what, I don't have to pay my loan, and I'm just not going to talk to my lender about it, because it's not an automatic. You have to ask for it.
So with that, thank you to President Vince for his leadership during all of this. He's done a phenomenal job, as have our state and local presidents across the country. Not the presidential year I think that any of them imagined, but the work they're doing is more important than ever. So thank you to all of our volunteer leaders. For those that are on the call, I know there are a few. I also want to sincerely thank our three speakers, Erin, Megan, and Nia. Y'all are doing some of the best work ever, and we sincerely appreciate you. I want to direct everybody before you leave to the coronavirus FAQ page on nar.realtor, and you can all text COVID-19 to 30644. I believe that's the same number that we've texted other things before to, and you'll get ongoing information on all of our advocacy efforts as it relates to COVID-19. I'll do a few other reminders before we sign off. Please fill out your evaluation form you'll receive following this session. The most frequently asked question was why I was wearing a tie, and so I would just like to apologize for wearing a tie today. I just couldn't help myself. Your comments on your evaluation will guide our future programming efforts, and I know that Kyle and Cindy and everybody else on the team that puts together this virtual AEI session is looking for feedback on what sessions to do in the future. Our next session is the Families First Coronavirus Response Act, and it'll take place next Friday, April 17th at 11 a.m. Central or 12 noon Eastern time. And then be on the lookout for the registration info. It'll be on the Hub, the AEI year-round Facebook group, and on the AEI landing page on nar.realtor. All of these sessions are being recorded, so please view it later. And I saw some questions in the chat that had already been addressed within the conversation, so if I missed you, it's possible that the question was already answered, so go back and watch again, share it with your staff. I know I'll be doing that. Thank you all again for joining us today. I really wish we could have all been together in San Diego, but this beautiful slideshow of the coastline will have to suffice. So thank you to everybody, and we look forward to seeing you next Friday.